Hi there, folks. It's middle of May 2020 here. My name is Andrew Shorter, VP Business Development at CH Financial here in Calgary. Today we are hosting the first in a series of interviews with business leaders in the financial services industry. The COVID-19 pandemic is having a dramatic impact on both business and job security, with many facing uncertainty in their careers and some transitioning to new opportunities. I'd like to introduce my friend and colleague and guest today, Mr. Navaz Kassam, President of GBL, an actuarial firm here in Calgary, based here in Calgary. Navaz is well versed in actuarial tax strategies catering to business owners. At CH Financial, we work closely with the GBL team as a preferred partner, and they provide some unique and innovative tax-driven solutions for those that may be transitioning and receiving a severance. The solution I understand that is most appropriate is called the RCA. So thanks for being here today, Navaz. Let's unravel the myth behind the RCA and how it works.
Perfect. First off, thanks for having me on, Andrew. Appreciate it.
Very welcome.
So the RCA is a retirement compensation arrangement. It's a very powerful tax strategy. So it's similar to an RSP in terms of any amounts going into the RCA are tax deductible and tax deferred. And then when you start drawing money down from an RCA, that's when you pay tax. Except there's no earnings limits, and the amount of contributions you can put into RCA are quite large, so it really makes it like a supersized RSP. How it works? Sorry, go on.
No, I was just going to say, wow, sounds great. Sounds really great, Navaz. And what would you say are some key uses and typical types of clients that you've worked with in the past?
So there's three main uses, and that ties into the advantages of the RCA. So the advantages are really you can reduce passive income in the corporation. There's a lot of flexibility within the RCA, so there's no mandated withdrawals. There's no mandated age 71 withdrawals as you would get with an RSP. And there's creditor protection. Because of those three key advantages, you get really enhanced retirement savings for business owners and senior executives. We get professional athletes utilizing the RCA. There's no earnings limits, so it allows them to save for retirement and not getting capped at the simple RSP limits that you can defer amounts into. And the last one we see more popular lately is severance, for severance cases.
Okay. Well, I guess that's fairly relevant right now, both here in Calgary and Alberta and across Canada for that matter. You know, we at CH Financial have a lot of senior executives and business owners as well as clients. And so it's potentially a solution we could use for our people. Could you tell us a little bit more about the severance side of things and how they work?
Oh, for sure. Great question. Yeah, and to your point, it has been more and more popular the last few years, unfortunately, with the economy being the way it is and with the addition of COVID is not helping. So it really works, and instead of taking the severance payment as a taxable payment, if we move it into an RCA, then the entire amount becomes tax deductible, and then the employee can withdraw on it over the next few years and take that as income as cash. So you prevent that large tax bill up front, and you can mitigate it by taking smaller payments out of the RCA if you choose to later on. So I'll give you an example. If you had a $500,000 severance, if you were to take that immediately, almost half of that would be taxable. So you lose $250,000 in tax. If you were to push that money to an RCA, the entire $500,000 would move into the RCA. And if you do something simple, let's say you earn $100,000 a year, you withdraw $100,000 a year from that RCA for the next 5 years, you would save over $100,000 in taxes paid from a simple strategy of avoiding the initial lump sum hit and deferring that into an RCA.
Well, Navaz, sounds too good to be true. I don't know why I wouldn't do it. But I know we're limited for time today, but I want to thank you for your time and our audience for listening as well. And I know we could talk about this for hours to come, and you've got some other great solutions we can perhaps touch on later as well. But thanks again for joining us today, Navaz. And if anyone wants to find out more, we're more than happy at CH Financial to provide some further information. And sounds really great. Thanks again, Navaz.